Okay, good morning, good afternoon, good evening, traders from across the globe, and welcome to a live class and the 1868th edition of Short Term Trading Live with Oscar. Traders, we have to get right into the mix here. Just know that this is an extremely risky business. You must never, ever trade these markets without money that you can absolutely afford to lose. Always place your stops first. And remember, if you don't know what you're doing, I can help to the best of my ability. Please come on down to livewithoscar.com and I'll see if I can help you out. So, lots of you today at the class. Welcome, welcome, and thank you for showing up. So, we are going to look at a couple of things here. This analysis you're looking at is where the market was just 2 days ago. I left my last video and I basically said this is perfect. Look, it's a breakout just on time for the US-China deal. It's your emini S&P chart. And I stated this is not going to be a double top. And I thought we'd get through that double top because of the China deal and mainly because we broke out of this big trend line right here. Major trend line, and we broke out of it. So I said, you know what? No way. It's not going to act like a double top. We're going to break out. So looking at all the other charts as well, we went with the breakout, and let's add a day in and see what happened. So let's pull out today, and here is what happened, and basically we got exactly what we were expecting. And it left a gap. Boom, right there it left us a gap. So it did break out, looked like there was going to be a China deal. Maybe there is, maybe there isn't, but we're technical traders here. I just thought the charts were showing us the news first. And we had a nice smart rally. But if you really look at what happened here, it's not so pretty any longer. And I'll show you why in several charts. So we had the nice fat rally right here. Right, let me grab a little tool here. We had a nice fat rally right here. And then today happened. Let's put today in. And now it gets ugly. So we filled that gap. Boy, oh boy, did we fill the gap. But we totally broke down. Went straight back into here. And if I make this chart a little smaller, something else will materialize before your eyes, and you'll see it on the next group of charts. This is absolutely construed as a triple top at the moment. Absolutely, positively. 1, 2, 3. And worse, we're below the 200 bar moving average. Let's move to another chart, and let me show you a little bit more about that. Dow Jones Transportation Average, traders. This one, once again, I showed you, looks like a deal is showing up. China deal showing up in the charts first. We're sitting here. We've got the inverted head and shoulders, which is a bullish formation. Left shoulder, head, right shoulder. Well, excuse me, left shoulder, right shoulder, head. Inverted head and shoulders. And the market opened higher and came down and filled its gap. And what did it do? It stayed above the do or die 200 bar moving average. That was as of yesterday. We're going to load today in, and oh my God, it gets ugly. Look what happened. We are completely below that 200 bar moving average. I mean, wow. Maybe it's a head test of the inverted head and shoulders, but for now, that is a miserable, miserable failure at the 200 bar moving average. That's your Dow Jones Transportation. Let's move along. Look at the Dow Jones Industrial. You had a beautiful, let's remove a bar. You had a beautiful W bottom here. A nice gap up above the 200 bar moving average. Wow, looking good, right? And then today happens. Oops. Not only did we fill that gap, we ended up back at the 200 bar. Not the worst thing in the world, but certainly not conducive to going up in the next day or two. So now we've got a situation changing. Now let's go forward. Let's look at another chart. Another indice, of course. Here's your Nasdaq. We had the same analysis. This will not act as a double top. We think we're going to blow right through it. The next day, the market did open, blew right through that double top, But look at the miserable failure as of today on Wednesday. Look at that failure at the 200. That is terrible, terrible. And once again, it's another indice that tried to get back above that 200 and failed. Now, I will tell you that I always call this the fund manager's blue light special. And I think what they do is they tend to be short if it gets under, and they get long if it's above. So if fund managers saw this today and went, well, let's get on the short side. It's not guaranteed, but it tends to be a fund manager's magnet. So I call it the blue light special. Nothing is guaranteed, and you need to look at all the other charts and see if your eyes are being tricked by one indice or one market by the 200. But when there's a setup, when there are lots of them there, the fund managers notice. Let's move along. Let's go look at the Russell now. Look at the miserable failure on that Russell. That is just terrible. And it was doing nicely, staying inside these channels, working well inside the channels. And then we had the gap fill. Believe it or not, you had a gap here. It was about this big, which got filled and more, but it came right down to the bottom of this trend line and took off again. But then we add today in, and forget that. Might have filled the gap, but it fell out of that channel and does not look even slightly good. That is the Russell. So then we go back. Let's go back to the Dow transportation average. On this transportation average, same sort of thing, miserable failure. This is, a leading market lately, this transportation average. Miserable failure here. Now, the bigger picture is the transportation average, the Dow. We're day traders. We look at smaller things. The big fund managers look at this. So let's go back to the Dow. And each time you look, you see that this is kind of a miserable failure. You can't call this a double top, but certainly 3 rounded tops took place here. And, a lot of times rounded tops are not the best thing that you can have happen in a market. So you've got a W bottom possibility, rounded top, broke through the 200 bar, even though it's above it at this second in time, filled its gap, a lot of infighting going on in there, which is creating the massive volatility that we're seeing. You've got bullish and bearish formations. You've got bearish and bullish news. Look at the size of these bars. When's the last time you had to deal with bars this large consistently? The Nasdaq. When is the last time? I don't remember in my entire trading career in indices, except for during 2008 through 10, that we've had to deal with bars this large. They are out of control. Look at the average daily bars here. Hundreds and hundreds of points. So the volatility is extreme. Just be careful there. There's this whole triple top looking thing that I think we really have to watch out for now. ES for sure. They all sort of look that way. So ES, this is an ugly chart because it's got a whole bunch of stuff on it, but I just wanted to illustrate quickly what that triple top would look like on that. There's 3 tops here, and they're not pretty. So negate all this other stuff you're looking at. It's a chart from a previous video. But not pretty, kids. ES, the one for this video, is sitting here. Let's now delete some stuff and get a better look at this chart in a cleaner version. This is what I think the street will absolutely construe right now as a triple top. All right, you got one, which this should obviously be in red now. Let's change this. Make it look like what it is. It's a warning sign. So you've got 1, 2, and the third one. And look at that spike down today. So there's the thing about triple tops. I don't actually believe in triple tops. I don't think they top out markets. Triple tops generally create a pullback first, and then the market seems to move higher. So these are known in almost any textbook as tops. But if you hang out with me long enough, you will find that I will show you consistently, time after time, that whoever wrote the books about triple tops didn't spend enough time reviewing them and studying them, because this is generally what happens after a triple top. You get this and you get that. It's not a triple top, it's a pause almost always. So I like that fact about what we're looking at, but that's not for day trading and that's not for tomorrow. Top day, today and tomorrow, what you're looking at now is miserable failure at the 200 bar moving average, a triple top, reason to be short, a day off tomorrow, not knowing what's going on with the news. Yuck. That's about all I can say. You know, that's a bad one. So here's where we stand, kids. Downside for sure. You got to sell rallies at this point. I'd advise you to come on down and hang out with us in the trading room. I'm not going to touch anything unless it comes to an omni level that I'm supposed to react to. Anything that we do, we will be nimble with, but we're going to sit tight. We're going to look for places now to sell rallies until we get another reason to be bullish. I wanted to show that to you moving forward on this day, Wednesday, and likely for when we open up on Thursday night, or I should say Wednesday night. Wednesday's closed from 9:30 a.m. if you're listening. Eastern time, markets will close from 9:30 a.m. till 6 p.m. on Wednesday. Moving forward Wednesday night, we're still going to likely be in this very same situation. So I'll, if you want, join me on Wednesday when the market's open and we'll see what's going to happen at 6 p.m. For the rest of you, thank you so much for showing up to my YouTube videos. And remember, keep your emotions out of trading, kids. Does anybody know how to do that by now? There's a bunch of you watching. Remember, say this to yourselves, even though it's not written down anywhere on this video. Say this to yourselves every morning, every afternoon, every evening. Golfer, you going to help me out here? And you know what that is. Stops are in. Emotions are out. Rock and roll traders, thank you so much. I'll see you at livewithoscar.com.